SS2 Economics Students of Jesse Best Quiz International. I'm very happy to welcome you back to our online tutorial platform. And I remain your host, Mr. Linus. Our focus today is on the concept of taxation under the elementary treatment of fiscal policy. Please don't go away. Our takeaways are: upon conclusion of this lesson, you should be able to explain the term taxation, highlight the principles of taxation, outline the objectives of taxation, state and explain the economic effects of taxation. Definition of taxation. Taxation is the method of imposing a compulsory levy by the government or its agency on individuals and firms or on goods and services. Tax, on the other hand, is a compulsory levy imposed by the government or its agency on individuals and firms or on goods and services. Now, one thing you have to note here is that it is compulsory. As long as someone is due to pay tax and the person doesn't pay it, it is an offense. It's a criminal act. So tax is something someone must do. The person have to do it. The person should do it. I call it involuntary contribution. So it's something that it's a way of contributing to the general well-being of people, to the general well-being of people in the society. So it's a compulsory contribution, whether you feel like it or not. A civil servant, a business owner, an income earner should and must pay a specific amount of money as tax. So, and such payment is made is meant for the general welfare of everyone in the country. The system, the way or the method of imposing or forcing people or compelling people to make such contribution is called taxation. The system of imposing tax on people or on goods and services or on a company or firm is called what? Taxation. Principles of a good tax system. Adam Smith, in his book Wealth of Nations, has laid down certain principles of a good tax system, which he called canons of a good tax system. Canon means a set of rule that is generally accepted by the people in the society or by the society. A rule that is generally accepted in the society. Now, or principle that is generally accepted in the society. Number one principle is principle of equity and equity or ability to pay. It states that tax should be levied on people according to their ability to pay. This simply means that individuals should not be made or to suffer untold hardship in the name of paying taxes. Someone should pay according to his strength, his ability, according to his earning or his income. So it should be based on what you're doing, what investment do you have. You pay according to your strength or your capability or your capacity. You shouldn't pay a way higher amount of money. You should pay according to your strength. So that is what the principle of equity or ability to pay. Principle of certainty. The tax should be certain and clear to everyone concerned or everybody concerned. The tax, the time of payment, the manner of payment and the amount paid should be clear and plain to the taxpayer. This is talking about clarity. So it should be clearly explained to the taxpayer. What time is the tax going to be carried out? What form? What manner? Is it going to be in documented file? Is the taxpayer going to fill some documents? What is expected of the taxpayer to know? It has to be stipulated, it has to be made clear to the taxpayer what the person is certainly paying for, the principle of certainty, the payment time, the manner, and the amount to pay. What is the amount required? So that person will have a problem with the officer in charge of collecting tax. Next point talks about convenience principle. This states that taxes be paid or collected at a time convenient to the taxpayers, e.g., an import duty should be duly paid as the imported goods arrive the country. Here it's talking about convenience. A taxpayer should pay import duty, for instance, when the goods arrive the country. It is not when, for instance, the importer has already conveyed his goods to the warehouse, and you now expect him to bring back those goods and have them checked before he or she is allowed to make sales or to carry back the goods, before he should pay his tax. So it's not done that way. It's expected that the taxpayer, having brought in the goods at the custom site, should make the import duty before the goods are cleared. So there should be convenience. It should be something that is not disturbing to the taxpayer. It's okay. It's not a burden. So it should be something the taxpayer is convenient and okay and happy to pay. Adaptability principle. The tax system should be flexible enough for adjustments when the need arises, e.g., in case of an emergency need for additional funds, and also in case of inflation. Government may decide to do what? To increase the income tax to control inflation. That is to reduce the disposable income of income earners, thereby making the income earners to have little or nothing at all to spend. In other words, the circulation of cash will reduce in the economy. It could also be used to generate revenue for emergency funding. Maybe there's a particular project that needs to be funded. Government may decide to increase the rate of tax or to adopt tax policy in order to fund such or finance such project. Maybe as an economy and a sector of the economy that needs improvement. So tax may be adopted to finance, tax collection may be adopted to finance such sector or to improve the activities of such sector. The next one is economic principle. It states that the cost of tax collection should be cheap relative to the revenue. The cost of tax collection should be cheap relative to the revenue. Now, every private business owner or every business owner is expected, upon conclusion of the production of its goods, the person is expected to make revenue during sales. Now, if the cost of production, for instance, is higher than the generated revenue, then there's no aim going into such business. That is where comparative cost advantage plays its role. That is, you have to venture into producing those items or those goods you are able to produce with least amount of cost. With what? Least cost. So such thing is a kind of, you have to know, I don't have comparative advantage over the production of this particular commodity. Therefore, you go for those things you can produce at least cost. So it could or should be applied in this manner, in this tax collection. So if the collection of tax will cost more than the revenue generated from tax, then there's no need. It is not economically wise to carry out such action or policy. Next one, simplicity. It states that a tax system should not be difficult to administer and understand. No issue of differences in interpretation. Now, the principle is actually talking about simplicity, not causing difficulty, no form of ambiguity, not symbolizing or interpreting two different things. Should be clear to the taxpayer as well as the officer administering what or collecting tax. So tax should be clear enough to be interpreted, and both parties should be on the same page. No issue of differences in what? Interpretation. Objectives of taxation. Number one, to control inflation. When inflation arises from excess demand, the government can impose high income taxes to reduce the amounts that consumers have for spending, thereby controlling inflation. Government may decide to control inflation by doing what? Increasing the amount, increasing the income tax. In other words, the disposable income will be reduced. Notes, in deflationary times, income taxes can be lowered to boost the level of demand again. If there's increase in general price level, that which is inflation, the opposite is deflation, which is decrease in the general price level of goods and services. If there's increase in the general prices of goods and services, government may decide to reduce such by controlling the income of the earner by imposing high income tax. In other words, the amount of money available for the consumer to spend is little or nothing at all. Thereby, when there is no money again to buy at that high price, the producer will be forced to reduce the price. Same is applicable in deflation, but this time around the opposite is applied, because the income of the consumer, the tax income will be reduced. The income tax will be reduced, thereby making the disposable income, which is the available money at the earner's disposal to spend, to increase, and the person will not have enough to demand for goods and services in the market. So that's how to control inflation and deflation. Prevention of dumping. Taxes are used to prevent dumping by the imposing of high import duties on foreign-made goods. Dumping is a condition in which goods are sold abroad at cheaper prices than are sold in the country in which they are produced. Dumping ruins local industries easily. It destroys it. China, for instance, practices dumping in Nigeria. Now, you agree with me there are many Chinese products in Nigeria. Are you getting it? Funny enough, when you get to China, you discover that such product in Nigeria is sold highly at a high price in China. Let me tell you the major aim why dumping is practiced: to dominate the market. That is it, nothing else. To dominate the market. When a product dominates the market, it simply means that everything in that country is every product in that country is being made by a particular country. In other words, they are controlling our economy, and the balance of payment will be negative. There will be unfavorable balance of payment because we do more of importation. So to encourage local manufacturers, government may decide to do what? Prevent dumping by imposing high import duties on importers. And when such is done, it discourages them, and such is prevented, thereby promoting local manufacturers from producing such goods that could have been imported into the country. And those goods are made made locally, and it increases the GDP and national income as well. Next point, to correct the adverse balance of payment, importation of foreign goods could be restricted by the use of heavy import duties, thereby conserving foreign exchange reserve. This will have a positive effect on balance of payment. I said this earlier. When there is what? Now I've explained the concept balance of payment. Balance of payment is when it's a record showing the receipts and the payments made to and generated from a foreign country. Now, made to means expenses. Generated means received, which is revenue received from international business. So when the amount paid to import goods, for instance, is higher than the amount generated from exporting goods, you have unfavorable balance of payments. But when the amount generated is higher than the amount made to import goods, and the amount generated from sale of goods to foreigners abroad is higher than the expenses, now you have favorable balance of payment. To correct the adverse effect, which is to correct unfavorable balance of payment, there is need to encourage local manufacturers as well. And to encourage local manufacturers means to discourage foreign importation, to discourage foreign goods rather, which is to discourage importation of foreign products. So, and there's a way to do it is to impose import, which is import tariff. Next point, curtail harmful consumption as well as production. Indirect taxes imposed can lead to higher prices, which can discourage the consumption of certain goods as well as their production. Now, indirect taxes, example of such indirect taxes is VAT, value added tax. There are some harmful products people consume that is very detrimental to their health, like marijuana, cigarettes, alcoholic drinks. To prevent the consumption of such commodity, high rate of tariff could be imposed on those goods, thereby discouraging the buyer. You understand? The consumer will be discouraged since it has to pay so amount of money to purchase such goods and consume. And when consumption is reduced, production is also reduced, because since no one is going for such commodity, is buying to consume, then the producer will making little or no revenue or profit, thereby there's no need venturing in the business since the aim of producing is to make profit. The producer will be discouraged and the business will be closed down. So that is it. The next point talks about reduce income inequalities through the pay as you earn payee system. The government can narrow the gap between the rich and the poor by introducing progressive tax system. Progressive tax system is a situation whereby you pay, the more you earn, the more you pay. The lower you earn, or the lower you earn, the lower you pay. Are you getting it? So it means pay as you earn. This will help the high income earners. This will make the high income earners to pay as much as they are earning, and make the low income earner to pay as low as they are earning. Thereby, there's no cheating. It is done equally. Everybody pays according to their what? To their capacity or strength. You understand? So it reduces income inequalities. The fourth one, to promote infant, or the last one, to promote infant industries. Now, infant industries are unable to compete with established foreign industries. In order to protect them from unfair competition, the government may impose high rates of duty on imports so that products from infant industries are made cheaper in the domestic market. Infant industries are newly established industries. They are industries trying to enter the market. There are small products you can see in your local areas, but are not seen in another state or in another area. They are examples of infant industries products. Some of them I have here. You have products from infant industry. You have a piggy. You have a Maggi, 2 minutes noodle. We have Bestie. We have a Snoop. We also have their gala. So although Biggie is now making waves in the market, you have Snoop. You agree with me? You quite agree with me that some of your friends in Lagos, Port Harcourt, Kano, Kaduna, when you ask them, do they have even Wanja? The Wanja you drink here, you drink in school, you buy in school. I don't think there is Wanja maybe in Anambra or Enugu. It may be in Lagos, or even in Port Harcourt or in Kaduna. So it's an infant industry. It's trying to enter the market. So for government to discourage the importation of foreign products in order to promote infant industry, government has to increase the level of what? Import duties, to discourage importers from importing foreign products, thereby encouraging local manufacturers. That's one of the objectives of what? Taxation. Economic effects of taxation. Economic effects of taxation. Effect on production. Production will be affected or reduced if excise duties are high. I explain excise duty as the tax or duty paid by local manufacturers. The tax or duty paid by local manufacturers. So what happens if the excise duty, the amount of money paid by local manufacturers in the production of their product, is very high? It simply means that the level of production will be low, because not every company or every industry will be able to stand for it, or be able to make production under such condition. So it affects the production negatively if the excise duty is way too high. effect on inflation, an increase in indirect taxes. Example of indirect taxes, we have import-export duties, they have excise duties, sales tax. Now, increase in these taxes and decrease in direct taxes like personal income tax, company tax by the government can lead to increase in the volume of money in circulation, thereby leading to inflation. Now, let me give you one distinction between direct and indirect tax or taxes. In indirect taxes, taxes are levied on goods or services, while in direct taxes, taxes are levied on income or revenue. So here, what you are saying here, if the tax on goods are increased, thereby when for instance now, if the amount you buy Coke increases from 200 a bottle to 250, that is like there's an increase in tax on the production of such, maybe an increase on company tax, which affects the price of what's it called, or increase in import duty, for instance. If it increases, if it affects the increase in the amount of money you pay for the bottle of Coke, now the bottle of Coke is not increased, which is that sales tax is increased. If it increases and the income of the individual is reduced, in other words, the amount the individual has, which is the disposable income, is what? Is the tax, decrease in tax in indirect tax. In other words, the amount the individual has is big. I'm talking about the disposable income. It's way too big now. Because when you reduce direct taxes, like personal income tax, the amount to be paid for tax is little, and the amount to be paid, a company to pay for tax is reduced. For instance, my income, if the amount I'm going to pay for tax is reduced, in other words, I have enough to spend. If you increase the tax paid on goods and reduce the tax paid on income, in other words, the individual has enough to spend. It simply means that too much money will now be chasing fewer goods, because goods are now sold at high prices and not all companies will be able to produce. Some will go out of market, and those that are available will increase the cost, the price at the market level, while the amount of money available to purchase such goods is very big. It's enough. It's way too high. The person has enough disposable income. Now, too much money will be chasing fewer goods. And when such happens, it does what? It causes inflation. So that's the effect on the economy. So it increases the general price level. Next one talks about effect on demand and supply. High indirect taxes will make demand and supply to be low, as few goods will be produced because prices are very high. Somehow related to the previous explanation. Now it says high indirect taxes will make demand and supply to be low, as well as few goods will be produced because prices are very high. If, like I said earlier, the excise duty is high, the import duty is high, sales tax high, VAT high, now it will make demand to do what? To be low. And once demand is low, the producer will get little or no revenue or profit, because nobody is buying. Since the cost of even producing such or making such goods available is low, it will discourage importers. It should discourage local producers, which is in the case of excise duty. Are you getting it? When it discourages them, supply is low, demand is low, because the available goods are costly. Then the price will be as the price is high. So what it simply means is that since price is high, not all producers will be able to produce, and not all consumers will be able to buy. So the effect is on demand. Increase in indirect tax makes demand to be low. Increase in indirect tax also affects the supply. It makes the supply to be low. Economic effect on what? Salaries of workers. Income tax tends to reduce the disposable income of workers. I think I've even explained this particular one, like when I was talking about on other points. I explained it. So disposable income is the amount left after taxes are paid by income earner. So the amount of money, it says it will affect the person's salary or wages. In other words, it will even affect the person's savings, because the amount that will be left to it save will be little. In fact, to some extent, the person may not even have anything to save, because after expenses, buying, catering for daily activities, paying for rent, water bill, and electricity bill, internet subscription, and food, and some other things, he discovered that, and I remember tax 6 are already deducted. He discovered that such individual may not have any savings at all, and it will affect investment. So income tax tends to reduce what? The disposable income. Effect on investment. Imposition of high excise duty, company tax, etc. on investors by government will discourage investors from investing in businesses. Now it's very clear. When there is high excise duty and high income tax and company tax. Now excise duty, like I said, money paid by local manufacturers. When they have too much money to pay in tax, some get discouraged. Big firms may actually be able to pay, but small firms may not be able to. Like some schools are closed down in Abuja because they cannot pay for the company tax. It's a commercial business, so they pay company tax. So not all companies may be able to do that. So some investments are closed down because of high excise duty. Company, maybe foreign investors coming into the country to invest, to set up a company, they may get discouraged when they discover that the amount of money to be paid for setting up or in tax for running the company in Nigeria is high. If it's very high, they may decide to go. Are you getting it? So it discourages what? Investment. It discourages what? Investment. Now the next point talks about effect on consumption. Consumption of some harmful goods can be reduced if government imposes heavy tax on such harmful goods. I think I've said something about this. One of the objectives is to curtail harmful consumption. So here, isn't harmful if such if there's increase in VAT, it's a good thing. It helps to discourage smokers, marijuanas, and even those alcoholic drinkers. It excludes them. It makes them to refrain from consuming such commodity for the betterment of their health. So it's a positive point. If the tax on VAT is increased, it will discourage them from the consumption of those harmful goods. So I think here we're going to draw the curtain here. But before you go, this is your assignment. Assignment. We have 3 objective questions. These are UTME questions. So number 4 is a theory. In 5 solid points, distinguish between direct and indirect what? Tax. Direct tax and indirect tax, to be submitted on your Google Classroom. Some performed very well in your last text, while some flunked the text. So I don't understand the reason. I cannot understand the reason why someone should fail it. You have your mobile phone. You could have Googled. You understand. And some of you don't do enough of reading. When you study more, those objective questions, you can attempt them and answer them correct and pick the correct options. Please do good to at least match this particular someone. And in your last time, someone got 25/25 because I graded 8/25. So this time around, I expect 2 or 3. Only one person scored 25. I expect 2 or 3 to at least smash the test. Thank you very kindly for listening. I hope to see you guys very soon. Stay safe.